Friday, June 21st, market analysis, Stan Ehrlich. Good morning, 10:02 California time. We're seeing some downside follow through from yesterday's bearish engulfing sell signals, ER official sell signals, much similar to these three over here, May 22, 23, and the one that really worked fairly well, May 28th. This one is in a really good spot for probable significant decline, and it's starting out as of the close of yesterday with the bearish engulfing, overbought conditions, custom engulfing, and custom RSI. Our green line right here represents the trade line from where we got short, which is around 55.60, let's say, a little bit lower. And that would be ER1 overnight that's still holding the short position. ER1 day trade did make some money. I will show you that chart in a second. So I'm bearish. I'm looking for a move down to begin with to 54.30 to maybe 54. That is some support from the last month or month and a half, but not necessarily a lot of support. Kind of depends on how it starts working its way lower. Another more reasonable downside technical correction level to hold at would be 50.30 down to 5,000. That would be pretty good. That's an old downside breakout, but somewhere between those two, I know that's a large area. There's another support area at 52.66. Let's take a look at the 1 minute. We've been dropping for a few minutes here after testing a little bit of resistance. That's this morning's activity and AM early. Yesterday's sell signal got our ER1 scalp short. That's the dashed dotted green trade line. Got out there. ER1 overnight gets short at exactly the same price and time for the same reasons, but is told to use a much slower stop. And as a result, the ER1 trailing stop dropped very, very fast because it was a scalp version of the same technique. The overnight version doesn't even move the stop yet. We haven't actually moved down that much since yesterday's lows. Some. I expect that we're going to see lower lows very soon, maybe yet today, and certainly very early next week. I don't want any kind of bullish engulfing. I don't want any significant rally. It should be fairly down from this point for at least a day or two. Then we could bounce a little bit. The spider has a bearish engulfing ER sell signal on top. Great. Doesn't have a little bit of activity for the holiday, so it is a cleaner, non-holiday data kind of a chart. We're short, top of the market so far, dropping down nicely at the moment. Not a heck of a lot, but this, I think, is just the beginning. We're looking at the spider 1 minute chart. Yesterday's scalp was a small loss. Too bad. Probably could have tightened the stop a little bit more to take a smaller loss, but, you know, leave it alone. The same trade, ER1 overnight version, the green trade line right here is doing very nicely and is on the way down momentarily. Now, the QQQ also had a bearish engulfing yesterday, as watched the NASDAQ for a minute in a moment, and is short as well on the triple Qs. And here is the 1 minute short from yesterday's. Early on, it looked like a bear trap, and for very short-term trading, it was. But we did not get hit on our stop. I adjusted to make sure we didn't. And it dropped down very nicely and got out with a day trade profit. Now, the equity plot for the overnight is almost exactly the same angle. So we're currently in that trade and holding, and you can see the equity green line wiggling up and down as the prices jump up and down. So far, so good. And it's leaving its stop for the longer term trade way up there at this point. Now you can change that if you want. Next, NASDAQ, NQ, September futures, bearish engulfing, sell signaled yesterday, great. Even if you throw out the data on the 19th, which is Juneteenth day, it still has a bearish engulfing relative to Tuesday's regular trading day, the day before Juneteenth. So it's a legitimate, no matter how you look at it, bearish engulfing, and it is slipping off as well at the moment. Now the 1 minute chart on 2 minute chart, so I can show you a little bit more historical information. On the NASDAQ futures September contract shows where we got short for the scalp. It got out very quickly. It looks like 7:30-ish it got out, and it got short at 6. Well, balanced about an hour. But the overnight version is still short from the same price. And let's push this to the right. And with the current quotes, doing very well. Now, I have changed the kicker, which is how the rate at which the STS Smart Trailing Stop moves on this trade, so that you can see how it stair steps its way down based on a variety of features, not just simply new lows in price since you're in the trade, but also other mathematical formulas. Next, YM daily data did not have the Dow Jones a bearish engulfing yesterday. We do have both highs on April 1st and the other high on May 20th with bearish engulfing sell signals. Boy, I hope these and the current yesterday's signals work as well as either of these did on the DAI, which also had a bullish engulfing at the exact bottom. I caught all 3 turns in a row. Unfortunately, we didn't catch this one as an official signal. And I do expect this double top formation is the dominant feature here since April, and that we will be starting to make new lows very soon. It's just lagging behind. And here is the YM 5-minute chart. That's the older sell signal, and the position trade ER1 overnight position trade got all the way down. It looks like it lasted 1, 2, 3, 4 days. And here we go. Russell, not too important, except that it could probably dribble its way back down to 1950-ish. And the 1 minute chart is also uneventful for the moment today. And that's a 5-minute chart, not a 1 minute chart. Now, bonds. Forming a little resistance last week or so. I think it's about to break into minor new lows for about a week, week and a half, and start to dribble on back down to about 17. If that doesn't hold, that's not really a big deal. 15 down to 14 should hold, probably get oversold in the process, be a test of the old bear trend line that we had, which was the top of a downward sliding channel, officially broken, obviously on June 3rd. There's your rally. There's a sell signal, worked for a day or so. Your test of the support line and back up, but no follow through at the moment. So a little downside breakout could be the start of something a little bit bigger. Yeah, I might see a 4 or 5 point break here. Next, notes. Same kind of commentary. Testing support areas, 108 down to about 107.5 in the next 2-3 weeks, something like that. Crude. Almost a new short sell signal happening almost now. Let's zoom in on this and see what I mean. We are currently trading at 80.51. Yesterday's low was 80.40. Today's low so far has been 80.48. If we hit 80.39 today, you will have an outside down day, bearish engulfing, and it's been overbought for 4 days. This is the 4th day, and it's stopping right at the top of this resistance area. So I'd love to see it drop approximately 12 ticks or more before the bell rings and get a signal. You may find it on Monday morning when we have the next YouTube. Next, natural gas. Bearish engulfing yesterday, but we weren't overbought within the allotted amount of time, and therefore no red signal. That last one worked for a couple of days fairly nicely. That last sell signal over here worked great. There's a buy signal that was great. That one was pretty good. And on. That's phenomenal. That's the high of the rally in the beginning of a huge decline. Okay. So I'm looking for sideways to lower. Next support level is going to be at 2.5-ish, 2.47-ish. Yeah. And then after that could easily be 2.3, 2.2. Next, Heating oil has a bearish engulfing ER sell signal in progress right now today, just starting. So we were overbought the last few days. We were right up against, didn't quite touch it, but came close to the resistance area that I've had plotted for quite a while. Stopped a couple, 3 days ago, and today managed to get a little bit above yesterday's high, and kaboom, outside down day, bearish engulfing. Now, hang on a second. Although this looks like a really good signal, you do have some decent so-so support starting right away, immediately, frankly, around where we are right now at the low of the day. But I think the signal's dominant, and I do expect it to challenge the next little support at 2.5 down to 247. But that's so close, that's not going to hold. Next, probable 2.4 down to 2.35. Yeah. There's also the chance it's going to make new lows for the whole damn shebang, longer term trend, and get, like it did before, into the huge longer term major support area. We'll see here. Next, gold. Large bearish engulfing today. Wasn't overbought, so no official sell signal. Dominant pattern I've been talking about is the double top formation. We came very close to a convincing downside breakout, but that didn't close below previous lows. And so for 2 days, it teased right in here and then rallied. Now, today's bearish engulfing implies to me it's all over the rally, and we're going to see it break below 2307.6543 and start heading down to my minimum downside objective at 2145, 2145, maybe a little above, a little below that support area. Next, if I'm bearish on gold, I should be able to justify it in the other precious metals, you would think. I'm looking for, and I drew this in yesterday afternoon after my YouTube. There is my exact price and time of where I am hoping, fingers crossed, we get a little rally on about Tuesday's high, right about at 31.35 and turn down. That would be the perfect timing for the first shoulder, the head, and the last shoulder high. It would be an educated guess as to what price. If I get some kind of a rally high on Tuesday that's inside this circle, I'll be pretty pleased. And then it goes down, of course. Minimum downside objective I haven't actually measured yet, but I can tell you, just eyeballing this real quick, that it's probably going to be something in the ballpark of 24.50.60, maybe a little under 25. That looks very likely. Why don't I do this? Why not? Top of the market, a bar to measure down to the neckline. That's the vertical height. Take it and go over to about the date you think it's going to break out. And I'm getting down to 24.36. Yeah, all right. That's the objective. I think that's crooked by one little day. No big deal. Good. Next, platinum. I can do the same thing in platinum, but it's got a little bit more validity to it because you've got a expectation of Tuesday for the shoulder high, and if it goes up a little bit more, it's going to be almost exactly the same price as the first shoulder, which is not uncommon at all. In fact, a lot of textbook examples might show you that. It's fairly rare to see it really symmetrical that way, horizontally. This neckline slants up. The last shoulder is probably going to be in the top end of the green circle, if not even maybe a little higher. But as long as it's around timing-wise Tuesday, sometime next week, I'll be pretty happy. But it's got to start to turn around and go down. Next, high grade. Big down day today. Nothing particularly super profound. I think it's going to test support again at 4.37, probably the low of the range at 4.29. And I expect for that to get broken. And the next support level is going to be in the area of 4.13. Next, beans. I finally got today to my minimum downside objective on the double top formation that I talked about starting, I don't know, probably a couple of days before May 28th. So it's been 3 weeks and it's here. Come and gone, done, forecasted, blah, blah, blah. Now what? Well, if we can hold, and we're close to being oversold, and start to show me some kind of reversal up, then I'll be talking about a triple bottom, which is fairly rare. So maybe we're not going to have a triple bottom. Remember, this is soybeans. I got oil, meal, corn, and wheat to talk about. And I'm concerned that if we start to make new lows below the low of 1104, say, that date was definitely February 29th, closing below that February 29th low could be very, very bearish immediately. So that's the fail-safe. Let's see what happens here. I think, but I don't see it yet. It could turn around. Next, oil. I've been talking about the last shoulder on head and shoulder bottom for months. We still have it, but the more it goes sideways here, the more time it's taking. I don't like that. If you zoom into this big 2-year pattern, and let's get some detail here, you can see that we have several days with the lows in the last couple of weeks, right in 43, about 30. So any close below that, putting in its severe jeopardy of breaking below the lowest low for months, 42.70. Doing that is going to jeopardize the last shoulder low completely and cause me to go to neutral, if not very, very bearish. This is just simply a big formations. Big formations typically lead to big moves, one way or the other. So, try to forecast it. Double top formation, second high soybean meal, ER sell signal, perfect. Not doing too much here the last couple of weeks. A little unusual for the market to go sideways, but it hasn't done anything wrong except delayed. So I'm still looking for 325 for the downside objective. And again, this is challenging support levels that are critically important for any longer term survival, so to speak. So there are some things I'm not liking a lot about these grains, but if they turn around all of a sudden and start to rally a lot, wow, save the day. What about corn and wheat? Corn is actually toying with the lowest lows, except for our bottom on the exact low day. We got it on February 27th. Then if we close below, let's say today's lows, I'm going to say below 40, 440. I'm not going to like that a damn bit. We're not oversold. I'm afraid it'll drop like a rock real quick for a test of the lowest lows, and we'll see what happens then. Again, a close below the low that was made on February 26th, our bullish engulfing ER green buy signal day, the bottom of the market so far would be in jeopardy, and it is super close, 441. Hey, being this close doesn't bode well. We'll talk about it on Monday. Wheat. It's also dropping like a rock, but it's very oversold at 14. So I am expecting it to bounce off of the support, maybe at 566-ish, or maybe even a test of the lows that we also picked in wheat to the exact day, March 11th. Also a buy signal the day before on March 8th, Friday and Monday. So that worked, past tense, great. And then we had a couple sell signals around the top, unfortunately not on a high day. But look what happens to these things. That was a bad buy signal. It may have probably lost a little bit, not too much. So wheat stands a chance of a good bounce, but don't do anything about it until you see it start to some reasonable minor amount anyway. Okay, we're looking at cattle. We have a little bit stronger day. It made a minor new high for the move. It's right up against the resistance area and important highs back in March. So I kind of expected to get caught here between a rock and a hard spot, so to speak. And it sort of has for the last 3 to 5 days already. So let's see what pans out here. So I'm just waiting. Next is hogs. We did get a buy signal on June 14th. It worked okay for a day or two. Great. We have a losing trade on the overnight ER1 trade, but we also have an entry today on ER3 scalp and overnight, and so far so good. We have a slightly higher close than where we bought it, and we do have the expectations of it making new highs above this week's highs, probably next week, or our stop at the moment, which is probably going to be going up very quickly, 86.62.5, will eventually get hit. So this is the same thing all the time when you're very early in a trade, whether it be a scalp or a position trade. You're always a little bit concerned, is it really going to work as well as I hope? Next chart, and we are through, ladies and gentlemen. Let's take a quick look at the spider. We dropped off a little bit more on the E-mini, and we just now are making new lows. And I think we'd stand a good chance of maybe making new lows for the whole day. Profitable trading to you.